to me, the simplest way to think about Bitcoin is that it's gaining traction as replacement for gold. I think that if someone wanted to understand the use case for Bitcoin, and there's many, but they're not too, they don't have a lot of conviction around something. To me, I can say easily it should supplant gold. And so I think Bitcoin should be, over 1 million over time. Should be good. I mean, so I think Bitcoin should really build upon this 120 before the end of the year. So, 200,000, maybe 250.
The crypto market has roared back to life in 2025. After years of crashes, regulatory crackdowns, and debates over its utility, Bitcoin has not only survived but is now trading near all-time highs between $115,000 and $120,000. Institutional demand, geopolitical tensions, and growing distrust in fiat currencies are fueling a new narrative. Bitcoin is no longer just a hedge but a cornerstone of the digital economy. Veteran strategist Tom Lee, former chief equity strategist at JP Morgan Chase and co-founder of Fundstrat Global Advisors, is among the most respected voices predicting Bitcoin's continued rise. He believes Bitcoin is not merely mimicking gold, it's replacing it as a digital reserve asset with the potential to surpass $1 million in value over the long term. Lee also forecasts Bitcoin could hit $200,000 to $250,000 by the end of this year, driven by deep-pocketed accumulation, reduced selling pressure, and a possible Federal Reserve rate cut cycle starting this September. In this video, we break down Lee's latest insights on why skepticism actually supports Bitcoin's bullish case, why its growth is far from over, and how Ethereum might be entering its own breakout decade. Stay with us as we explore the macroeconomic forces reshaping digital finance and why this could mark the beginning of a historic crypto supercycle. Still paying taxes on your crypto gains? What if you didn't have to? With ITrust Capital, you can buy and sell crypto inside a tax-advantaged IRA, giving you a smarter way to grow your portfolio without worrying about capital gains tax. That's why they're the #1 crypto IRA platform in America, with billions in tax-advantaged transactions. There are multiple ways to fund your account. You can make a contribution, transfer an existing IRA, or roll over an old 401k or employer plan. You'll get access to a wide range of digital assets, low fees, and 24/7 trading, all backed by secure, one-to-one asset ownership with institutional-grade custody. And if you have questions, ITrust Capital offers 100% US-based customer support with real people ready to help. Click the link, use code DOSE7, and get your $100 funding bonus today. Start building your crypto wealth, tax-advantaged, with ITrust Capital.
And I think it is a good sign that many people are skeptical, because we believe this is one of the most hated V-shaped rallies, and we are making new highs. And instead of people justifying new highs, we have many people saying markets should not be here because the Fed is not cutting rates or there's tariff uncertainty. So that skepticism is healthy for markets.
Why is it healthy for markets?
Well, it's a sign that there's still price discovery underway, because if people were all bullish in the public realm, when everyone's bullish, then it's probably in the price. But when there's plenty of skepticisms and reasons to be skeptical, that allows markets to have positive surprise. And I think that's true of crypto. Bitcoin, is making all-time highs. It's kind of silent, right?
Bitcoin, you're predicting, I think, even higher prices by the end of the year. So why do you feel that way?
Well, for equities, it's really straightforward. Number one, the economy has proven to be incredibly resilient. I mean, I don't think people should take a half-empty take. We've thrown massive tariffs. We had essentially a Cuban Missile Crisis moment, and yet S&P earnings are going to grow 12% this quarter. And there's not any signs really of sustained or a reigniting of inflation. There might be some inflation temporary, but that's very different than inflation dynamic taking root. And the second is people says that deficits and this current budget are so bad that no one's going to buy our debt, but yields are behaving. 10-year yield was 5%. 2 years ago, it's 4.5% now. And in terms of multiples, I think people are getting this wrong. There's a lot of people saying the market's expensive because the PE of the market should be the average of 16 or 17. Now, I've been an equity analyst for 34 years, and I used to cover stocks. I was a tech analyst for 17 of those years. I never once found an analyst who made money saying you should trade at an average PE. Like literally you either have arguments for PE expanding, and then you just have to determine when you've hit bubble, or PEs contract when the story is getting worse and there's no bottom. And we just threw 6 extinction events at the S&P 500 in the last 5 years. COVID, then a bullwhip supply chain effect that normally should bankrupt businesses. We had the fastest surge in inflation in 2 generations, the fastest Fed hikes in history. We had tariff Armageddon. I mean, literally a Cuban Missile Crisis moment for the stock market this year. And then the US bombed Iran's nuclear facilities. Each of those should have caused a crash in the stock market. And yet the S&P recovered every time. If we were talking about this as a single stock, we'd say, look, if you threw 6 things at a company and it survived, it should have PE expansion. And yet most people think the market's expensive. To me, the simplest way to think about Bitcoin is that it's gaining traction as replacement for gold. I think that if someone wanted to understand the use case for Bitcoin, and there's many, but they're not too, they don't have a lot of conviction around something. To me, I can say easily it should supplant gold. And so I think Bitcoin should be, over $1 million over time. And then I kind of prescribing to the view that there's probably a chance that maybe the 4-year cycle is ending for Bitcoin because of the way institutional adoption of that thesis is taking place. And so you have institutional and essentially permanent holders of Bitcoin coming in. So it should be good. I mean, so I think Bitcoin should really build upon this 120 before the end of the year. So, 200,000, maybe 250. Well, you can't create a bubble because you're buying Bitcoin. So unless you think Bitcoin's a bubble, it's not a bubble, right? I think the crypto treasuries there's going to be winners and losers because there is a scarcity to it, actually. So Bitcoin is scarce. And so it's proper for companies to have Bitcoin on their balance sheet over time. And I think banks will, because banks, as Bitcoin really does get recognized in its proper place as how you move money in the financial system, then the banking sector will actually stake Bitcoin as well. They're going to want to own it, I mean. And so these treasuries are doing what other businesses will eventually do. But for them to get a premium to their Bitcoin because of how they're executing a strategy, that is the scarce part. MicroStrategy has already proven that their strategy works because they started on August 12th, 2020. They bought 260 million Bitcoin. Stock was $13. Now they own close to 5% of the Bitcoin network.
Yeah.
And they announced a huge buy last week, but the stock is 400. It's gone up 30 times. Mm-hmm. So that's truly executed in a masterful way. I don't know if the 50 other Bitcoin treasury companies, or I don't know how many are. I actually looked at that website.
BitcoinTreasuries.net.
Yeah, and there's like 50 companies. Not all of them are doing treasury strategies.
Right.
But I think a handful will emerge as winners, but not everyone.
Are you bullish on some over others? Like, can you name any?
Well, I would say, again, I don't necessarily want to necessarily recommend one or the other, except for one that's in our granny shots. But I'd say there's been differentiation, like there's a geographic differentiation. So in Japan, there aren't ETFs. So Metaplanet's been amazing, and in the UK, there's a handful of names. And then there's one just emerged in Korea. So is a geographically diverse thing. They have an opportunity to distinguish themselves. Mm-hmm. But because of like what I've seen in treasuries, there is a certain like alchemy that like MicroStrategy has, which is MicroStrategy has made MicroStrategy shareholders into customers. I mean, he has orange pilled every shareholder of MicroStrategy, and he has maintained a premium, and he has transformed capital markets. That is what needs to be done for these other treasuries to be successful. And not everyone probably has that combination.
Tom Lee's prediction that Bitcoin could reach $200,000 to $250,000 by the end of the year may sound bold, but the data behind it makes the forecast quite plausible. Institutional demand is a major driver, with asset managers, pension funds, and banks increasingly viewing Bitcoin as digital gold, a long-term reserve asset. With supply tightening after the latest halving and demand surging, the price dynamics are primed for a strong breakout. Lee believes Bitcoin won't just gradually rise, it could surge sharply, fueled by fear of missing out, corporate treasuries adding BTC to their balance sheets, and rate cuts making risk assets more appealing. Lee isn't alone in this bullish outlook. Analysts at Standard Chartered have projected Bitcoin could hit $200,000 by the end of 2025 if ETFs gain momentum and institutional inflows continue. Meanwhile, prominent investors like Anthony Scaramucci and Cathy Wood have suggested even higher long-term target. But Lee's enthusiasm extends beyond Bitcoin. His Ethereum-focused firm BitMine is actively buying ETH rather than BTC. Why the shift? While Bitcoin has cemented itself as digital gold, Lee sees Ethereum entering a new phase of institutional relevance. With tokenization, smart contracts, and stablecoins reshaping finance, Ethereum is at the center of this transformation. In the next part of his interview, Lee explains why Ethereum could be the bigger macro opportunity over the next decade, as Wall Street quietly builds on-chain infrastructure that might turn ETH into the next trillion-dollar asset.
I don't see this as a conflict. It's the same reason why someone who says they like Tesla but they like Palantir, because they're both scarce stocks, right? Like there's one Tesla because there's only one Elon Musk in the world. And there's only one Palantir because while it's not completely clear exactly how Palantir transforms companies, you can see whether it's a hospital in Michigan or wherever, they are really providing superhuman powers to a business. So, you should own both. Bitcoin to me is a proven blockchain that in my mind is storing value. And it is, as like Michael Sayer says, it's immaculate. And I do think the simplest way to think of it is it's replacing gold. So at least let's get to 1 million and then we can see how much further Bitcoin goes. But the world is also grappling with the digitalization of everything that we do. And so we're storing information and we're tokenizing businesses and we're tokenizing the dollar. And stablecoins have become so important, in fact, from a policy perspective, because stablecoins are now actually big buyers of treasuries collectively. I mean, that's why you may say you don't have to worry about deficits because stablecoins will buy the debt. Well, that is the ChatGPT moment for crypto, because what's happened is that the first killer app for crypto has emerged that is now seeing widespread adoption, which is stablecoins. And now Wall Street is running to tokenize and maybe even financialize their entire system on the blockchain. But that means they require smart contracts. So they're not fighting with Bitcoin. Bitcoin paved the way for Wall Street to recognize that you don't have to have tangible assets to create value. But if you're going to tokenize what Wall Street does and you tokenize stocks and real estate, you need smart contracts. And the biggest and most secure blockchain with no downtime is Ethereum. And it's legally compliant. And the majority of stablecoins and real-world assets that have been tokenized are taking place on Ethereum. So to me, that is the macro moment. So in 2017, when I first wrote about Bitcoin, I saw this as the time when Wall Street would eventually come to recognize Bitcoin's importance. So Bitcoin, of course, had already accomplished a lot because it reached 100 billion in network value. And that's why I wrote about it. It's like, if you don't believe in something that gets to 100 billion, like you got to pay attention to. And our thesis was that Wall Street would start to view this as just digital gold. Well, I think Ethereum is having its 2017 moment now, because now is the time that Wall Street will take tokenization seriously, and it's taking place on Ethereum. So I do think it is the biggest macro trade for the next decade.
How do you mitigate the risk in Ethereum that a lot of people see? I mean, the SEC could still classify it as a security.
Yes. Well, these risks that you describe seem like smaller risks compared to the fragility of the existing financial system, right? So let's say, what is the financial system's value in the US, in the real world today? Well, the GDP is 80 trillion and the financial system is 80 trillion. And that runs on plumbing that if you're raising risks, are far more fragile. We are using trust vectors that are, in some cases, arcane systems, transfer agents that, rubber stamp things. I mean, look at the level of fraudulent activity on a traditional financial system ledger. JP Morgan, who I think is leading in terms of security for its customers and trying to do fraud prevention, still about 7% of their activity is suspicious. So you can't prevent infiltration. So is Ethereum superior to that? Yeah. I mean, so if you're comparing it to Bitcoin, we're comparing the wrong analog, is my opinion.
So if you had to put all your money into one, though, over the next 10 years, would you choose Bitcoin or Ethereum?
Now, why are we making that a choice?
I'm just curious. If you could just only choose one.
If I had to choose, because I'm chairman of BitMine, which is an Ethereum treasury, then I, of course, would choose Ethereum. You may have listeners that are kind of curious about Bitcoin, but, they have to also appreciate that every generation, like we're talking about Generation Alpha now, they are native. They're born native, and they're also going to be born in a world of AI. And so this idea of like physical money and only physical things represent value is not going to exist. So I think that's why Bitcoin's future, the best years are still ahead. For crypto, Bitcoin, obviously, and Ethereum. Not everyone will agree on Ethereum, but because we have another generation of people and decision makers that are really growing up as in a world of where AI is prevalent in their lives, and then really a token economy. So I think the best years are still ahead.
A new Cointelegraph report highlights a critical yet overlooked trend in crypto, a silent demand shock brewing behind the scenes. Over-the-counter Bitcoin desks, favored by large institutions and corporate treasuries for quietly accumulating BTC, are running low on supply. OTC balances have fallen to just 155,000 BTC, one of the lowest levels ever recorded. Despite billions of dollars in Bitcoin being bought by companies like MicroStrategy and several Bitcoin ETFs this year, prices have remained stable around $115,000 to $120,000. This has puzzled many retail investors, wondering why the price hasn't surged yet. The explanation lies in how OTC trading works. When big players buy Bitcoin OTC, that demand doesn't immediately affect the spot price because these transactions happen off the public market. But as OTC reserves dwindle and demand stays strong, more buying will have to take place on public exchanges. This shift could create a significant supply crunch, impacting not just Bitcoin but the broader crypto market. The timing is crucial. If the Federal Reserve begins cutting rates as expected by September, a fresh wave of liquidity could enter the market. With limited sellers and shrinking institutional inventories, even modest new demand could trigger a rapid price surge. Historically, Bitcoin's biggest rallies have been fueled by such structural squeezes: strong demand, tight supply, and a trigger that unleashes explosive upside. Tom Lee's prediction that Bitcoin could hit $200,000 to $250,000 by year-end aligns closely with this scenario. While his outlook is driven by broader macro factors like growing institutional conviction and Bitcoin's recognition as digital gold, the supply data from OTC desks provides concrete proof that the setup is real. The market hasn't priced in this buying yet, but once it does, the move could be swift and dramatic. Whether you're a long-term holder or watching from the sidelines, now is the time to pay close attention. The next big leg up might come sooner than expected. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.